Hey, it's early on Monday, 28th of March, getting towards the end of the month, last week of the month. Right, we're looking at some yen pairs at the moment. Euro yen. We had a slightly negative candle on Friday. Didn't fool me. I didn't call a top in the yen. I suggested that, sorry, in the yen pairs. I didn't call a bottom in the actual yen. Um, and this morning we can see that we've got another big green candle there, euro pushing higher against the yen. So I thought maybe that might signal that the yen would start to consolidate and trade sideways, but that's not likely to be the case now, as you can see. CAD yen, let's just get on to the daily chart only. CAD yen, as you can see, pushing up higher. Get rid of those fibs. Pushing higher. Look, it's quite incredible. You really don't see that often. Just a huge series of green candles. Where do we want to go to now? Let's look at the New Zealand dollar versus the Japanese yen. So again, mostly green candles there. A couple of reds. Slightly negative candle on Friday with that hammer, but big green candle again today. So I don't know whether there are some shorts, some new shorts in these pairs against the yen, thinking that we could turn around and dip after such an incredible run. Really very rare. But if there are, they're getting squeezed. So I'm glad I didn't call a top to that. I've had a buy signal on all the pairs against the yen for quite a while now, and I haven't reversed that. Unlikely you're still long. I'm certainly not. But it does look like the yen will continue to weaken at this stage. I am looking out for any negative signals. Clearly, very overbought all of the pairs against the yen because we've had such an incredible move, but that certainly does not mean that the yen is about to turn around and rocket. I just wanted to point that out. Okay, oops, I'm going to talk about gold when I get this off my screen because I like to talk about gold. It's one of my favorite markets, and I know it's one of the most popular ones for people who follow me, but it's not easy to read at the moment. As you can see, we're very gradually going higher. We have been ever since, what's this low here, 16th of March. So we spent the rest of the second half of March crawling up, mostly trading sideways. Not easy. We have had a couple of winning trades still. The best area for me to trade would be that mid sort of 1930 area where there's some support. But as you can see on the 4-hour chart, we're not really going anywhere at all. Probably a waste of time to focus too much on gold for that reason. And when you see on the daily chart, you know, up one day, down the next for several days, and we burst higher and again just going sideways. So there's probably better things to focus on than gold right now. For me, the stock markets are more interesting, especially the US stock markets. I'm looking at the S&P here. Hit a really nice resistance level, as I talked about on Friday, around the 45 area, and we've come to a halt there. Moving average resistance as well, 61.8% fib. So some short positions were offered a decent profit on Friday, but we have bounced back. We're still holding the resistance level. The high for today, since the open on Sunday night, is still where I had my resistance level. So there is, you know, we're very overbought. I really, on a fundamental basis, I can't really understand what these stock markets are doing, bouncing back so strongly. You know, to me, there just seems like so many problems around the world with inflation. Interest rates going through the roof. Put that trend line on there as well. Mortgage rates in the US went from near 4 to near 5% just last week. So yeah, I really can't understand why US stock markets have not reacted to that. Anyway, I don't focus on the fundamentals. I'm a technical analyst, so I'm focusing on the technicals. And for me, that's a strong resistance level in the S&P, which is certainly holding at the moment. Nasdaq, maybe a little more room on the upside. Maybe we have another squeeze coming. I don't know for sure. At the moment, the 50% fib is holding at around 14,800. So maybe that'll be it. If the market isn't that strong, then 50% is probably enough of a bounce. However, for me, there is a lot of resistance around 15,200. That really would be a very strong resistance level. I'd love to see it up there, sort of 15,150, 15,250. If we could get up there, I personally think that would be a really nice selling opportunity. It ties in well with previous price action, moving averages. I like the fib level. I even like the trend line here that we've got. So we'll see. I also wanted to show you the Dow Jones, the US 30. There we go. Also hitting some good resistance. This market has managed to bounce back up through the 50% fib. So like the S&P, a little bit stronger than the Nasdaq. Nasdaq has been hit hardest of the three markets. and we are approaching the 61.8, which is around 35,100, coupled with some moving average resistance and trend line as well. So again, I'm thinking that is going to be the strongest resistance level that we have hit on the bounce, and I'm wondering if that is the end of the recovery, and then maybe we'll see more of a bear trend develop. I still feel quite negative about these stock markets. It's just that bear trends do take a long time to develop. Bulls just don't roll over within a week or a month and say, oh, you know what, buying the dip's not going to work anymore. They will buy the dip. And even when stock markets collapse, as I think they probably will sooner rather than later, we will still get these massive up days where the market will really squeeze and everyone thinks the bear market is over, and then of course you'll get this huge sell-off as well. Bear markets are phenomenally volatile. It is actually extremely difficult to hold a short position in a bear market. You really have to take your profit when you see it and then wait for the big bounce again. Okay, that's it for me from today. Don't really think there's anything else I want to highlight. If you're a subscriber, then you've got your trade sheet with all my trade ideas on, and of course you've got all my analysis as well. So that's it. Any comments and suggestions, please throw them in the box and I'll be happy to respond.